The question is, what are the most common mistakes made by business owners as it relates to selling their business? What a great question. Thanks for that. The 3 most common mistakes made by business owners are as follows. Number 3 is a lack of preparation. Selling a business for its highest value includes not just financial readiness, but also operational readiness. Doing things like making sure you have people in place that know how to do your job after you're gone. Documenting processes so the new owner has reference material to go to when needed. Making a comprehensive list of vendors and suppliers and key people and customers is super helpful as well. Maintaining strong controls on inventory and equipment, including maintenance and repair records, is paramount as well. Be sure that everything is in working order. If there's any equipment that is broken or outdated, get rid of it. Clean and organize everything. It's scary enough buying a business without having to figure out, let's say, a personalized system of filing or organization. Look at your business through the eyes of a buyer. Number 2 is financial reporting. Let's face it, no one runs their business to see how much tax they can pay. But what's the first thing a buyer wants to see? You guessed it, a tax return. There are things that can be done to prepare your financial reports that still mitigate income taxes by simply allocating the money differently. Things like taking a salary instead of a draw, or keeping track of personal expenses that are covered by the business as fringe benefits. Those are things that are valuable to a buyer as long as we can prove where they went. Does that mean you might pay a little more tax? Maybe, or maybe not. It depends. But we're happy to work with you and your accountant to find the best solution for your individual situation. Here's the final part of that. We only file taxes once a year. So to properly prepare your business, you need to begin better financial reporting 2 or even 3 years prior to a sale. If you have a sudden need to sell your business and haven't had time to improve your financial reports, don't panic. Let us work with you to extract the information needed for a successful transaction. And now, the number 1 mistake that people make as it relates to selling a business. Drum roll, please. They wait too long. All too often, we're working with sellers or their families after an injury, illness, or even an unexpected or untimely death of a key person in the business. The business interruption may not even be caused by the owner. It can be caused by a key producer that leaves or retires. Anything that has an adverse effect on the business can lead to a reduced valuation or even make the business unsellable at any price. That includes burnout. Being a business owner is hard, and it often leads to burnout or owner fatigue that can create a negative trend in the company's financial performance. It is much, much harder to sell a business that's making less and less each year than one that has an upward trajectory. Those are also big factors in banks providing financing for your buyer. Sometimes burnout shows up after a few years. Other times it's after 30 plus years. But chances are it will show up sooner or later. So, the bottom line for your question is, prepare your business to appeal to a buyer. Keep very good financial records. And don't wait too long. Selling a business at its peak is great, but time can become your business's worst enemy. Thanks again for this great question. If you'd like more information about preparing your business for sale, or if you're ready to find out what your business is worth right now, please give us a call to set a free, no-obligation consultation with one of our experienced brokers. Thanks for your time watching this video. We truly do appreciate it.